UPS having its worst day since July 2006 after missing top and bottom line estimates. Shares sinking nearly 10%. In an interview today, UPS CEO Carol Tomé told CNBC's Frank Holland about the impact changing consumer habits has had on the business.
We saw retail sales in the United States take a marked decline in the month of March, and we saw that in our business as well. There's a real change in consumer shopping behavior, moving from goods to service, spending more of their wallet on things like food. 9% of household budgets is going to food now, compared to 7% just a couple of years ago.
The shipping giant forecasting full-year revenue to come in at the lower end of expectations. She mentioned specifically the month of March, and you have to wonder how much of that is actually carrying over, how much of that was simply because of the banking crisis, not simply, but because of the banking crisis, and consumers not feeling very good about spending and things like that.
She told you actually how much a little bit later, which was that April was stabilized. They felt much better. I think that the primary thing going on here is really the negotiation with labor, and that customers are deciding, you know, we don't want to be vulnerable to a potential work stoppage. We've got to move some of our business to FedEx or elsewhere, but FedEx would be the most likely place. And that, so she's seeing that business move somewhat. She really believes it will come back. And that I think her guidance is conservative. I think this sell-off is overdone. However, I do think it's a 3-day rule kind of thing. This is a big move, obviously.
I think it's got to be more than a 3-day rule when this is a 17-year, kind of head, the graphic on your screen. This is the worst day in 17 years for this company. And the guidance cut was so extraordinary that I think you really have to see where it settles out. I mean, it's nice that they've reset expectations. It tells you that there's a post-COVID normalization that's still underway. It also tells you that their U.S. domestic margin still has some headwinds to go. UPS, remember, trades at such a premium to FedEx and has deserved that premium. Has deserved that premium. After today, maybe not so
Even
much.
Before,
and it's also notable that UPS didn't take down the rest of the industrial group, of which, if you look at the XLI ETF, of which UPS, I think, is the second largest, but it's about a 5% position, was down 1.8 on a difficult tape, and you'd think with UPS it would be down a lot more. So this was more UPS. And I think we have to ask Guy, because I know he worked there.
I did.
And I hope you had nothing to do with this.
Of course not. I was there a long time ago. That was in the heyday of UPS, I'll have you know. For the day that I worked there, as I've said, I was Employee of the Month. I'm sure we have the footage somewhere, which we won't show now. But I'll say U.S.-China, down 20%. Now, we could say Visa, MasterCard, that's a tell on the consumer to a point. I get it. This is a pretty direct tell in terms of what's going on. And you could write it off to maybe a couple months here and there in terms of the quarter. Things got back on tracks in April. Maybe yes, or maybe no. And that valuation, which was rich, which is getting a little more in line. This stock, I think, bottomed out at 161-ish, the last low we made in the market. I mean, that seems to be where it's headed.